Welcome to Markonomics 101. Today is November 10th edition. Today is about inflation. That's our theme today, all about inflation. So here I am outside the Grand Federal Reserve, sitting here, a little cold, it's a little chilly this time of year, but I got my long sleeve shirt. So I'm going to tell you all about why things are kind of unexpected and changing in the market, but we're going to hold with one prediction that is going to really be the most important one, and that is inflation's coming. This is a commodity cycle, and this is the end of a paper era. So with that, let's go to the charts and we'll start talking about that. Okay, so first chart is the Dow Jones Industrials. I have to draw in green that it actually did make a new high, which we did not expect this kind of a rally to occur in the Dow. I would say right now it is on the cusp of, it could do one of two things. We just have to sort of let it play itself out. One is it makes like an island top, like what it's looking like right now, those two little data points, and then it gaps down tomorrow. That could happen. Anything could happen from here. So right now, the market is one big question mark. This was not expected. And a lot of it was the financial companies in general. We talked about the banks really did some amazing stuff. So we'll talk about that too in a second. So in any event, this is the NASDAQ 100. Now here's a reason not to think that things are all that great, because the NASDAQ 100 is actually now underperforming the Dow, whereas it has been the leader before. What you notice is, here in this, this pennant formation in the chart, is that it actually has made an island top, has broken down, doesn't look really good. And so, that tends to, again, have us lean to the bearish side that we've been clinging to the whole time here. I just don't want to be too stuck in a worldview, but this lets me, at least allows me to think that we really could be in one of those, we really probably are on those turning points in the market. Here's another one which confuses everybody too, especially me. This is a Standard & Poor's 500. I put in blue sort of the pennant formation. Notice it breaks out and then it breaks down. So, I don't know what to make of this. I would say this right now. I would be very careful about what kind of diagnosis to give this without a few more days here. It has definitely been very strange where technology now all of a sudden is acting horribly. I'll show you that. And all of a sudden the financial sector is acting really well. I don't understand why or what changed, but this is Apple. It has not really broken out, but it's in a pattern that one could interpret as being bearish or bullish. So really it's a matter of, is it going to break down below the red support line, or is it going to break out above the green line? Apple looked to me like it was topping. It still kind of does. But I don't want to get too stuck on the fact that it might just break out some more. I don't know why it would, but it was John Maynard Keynes that said the markets can stay irrational much longer than you can stay solvent. So, you got to just, be careful of that. Here's one that looks bad again, Amazon. Okay, now Amazon looks like it's in a head and shoulders. And if you look at it, it looks like it's close to breaking down. So, this has been a leader on the way up. This looks crappy on the way down. Right now, this is not a pattern that in any way, shape, or form can be interpreted as a bullish pattern for this thing. So, right now, this one keeps me, somewhat leaning that on the bearish side, as does this one. This is Facebook, home of the fact checkers. Facebook head and shoulders, and again breaking down. You can see on the the last post, again it made an island top. So this one doesn't look good either. So this one again has me leaning the other way. Now Google is actually a fairly positive chart. It made a new high. It while it broke down from the uptrend line, it came back down. Now it's making another uptrend line, a new high. So it could also make an island high here. Again, this is one of the ones you've got to kind of let the charts tell you what to think instead of reading them from what you want them to tell you. What I'm saying is that while I would like to have my prior views totally confirmed, they're not. These cause me some doubt, and they should cause anybody some doubt, because that way you're always adjusting to new behavior or new information as you get it. You should never get too stuck on one way. It's got to go down. It's got to go up. Things change. So um, this is Microsoft, again, not looking good. One of the big cap companies, again, looking like it's in a head and shoulders pattern. Hard to imagine that this is anything positive right here. It looked like this looks like a really lousy chart. So, again, Tesla, the way it was drawn today looked much better than it did a few days ago. I still don't really ever want to participate in this company personally because I don't understand it. But this one is still in a relatively okay chart, but it could break down. It's right close to breaking down. So that's one to watch too. Now, this is something that is the most important thing we're going to talk about today is going to be interest rates. These are the 5-year rates of the Treasury bill rates. Notice that they've bottomed in like a saucer-like bottom, and that they're starting upwards. Now, this one is the 5-year. It's really not as important as the 10-year. The 10-year is almost at 1% interest rate. Now, that doesn't sound like a lot, but it was at, it got as low as like 35 basis points. That's a large, percentage move at some point. So you have to be, cognizant of that. And now this thing really, has the look to me of something that is going to accelerate. It really does. And that's going to cause some problems. For example, here's the 30-year. The 30-year, the longest maturity that the Treasury puts out, that thing is now at 1.7%. Again, not a big deal, but it's almost to where it was, at the beginning of the year, 2.3% or a year ago. So this thing is catching back up. And the reason that's important is shown here in this chart, TLT. TLT is an ETF for the for long dated treasuries. So in other words, as like the 30-year and that goes up, this goes down. This is like the principal of a bond. So look at how much it's lost in just the last couple months. In the last couple months, this has lost 10% of its principal. So if you're leveraged holding these and you start losing money, like you start bleeding like crazy, you're going to be in trouble. And I've speculated that, this is going to cause some institutions some problems. I don't know who, I don't know how much, but it's called a duration mismatch, and it's when you have your liabilities and your assets are not sensitive the same way to the same movement. Like, for example, in interest rates, you have you get clobbered on the asset side, whereas your liabilities are not helped. So that's kind of what I'm afraid is happening here. Here's the dollar. It's just about, it's not looking good. This is actually helping will help the precious metals, which are actually looking pretty good again. This thing looks like it's breaking down. It made kind of a bottomish looking type thing, but I'm not that convinced anymore. This is silver. Now, I have been bearish, bullish on silver for a long time. Right now, I'm going to say that this is actually a constructive looking pattern. If you look at the individual charts of some of the miners, they're very constructive. It is inevitable that we are going to have inflation. Commodity stocks are showing it in various ways. And it's just a matter of time before you start seeing it. I feel very comfortable about the long run trend here. This pattern, well, it still could break down. I doubt it, but it could. This is gold. Gold, I put a blue circle in it because it broke up, then broke down. So you have stuff like that going on right now, making it very, very hard to trade because you get good signals and then you end up getting these whips back and forth. And a lot of them seem to be caused by, strange election news. That's a weird thing. This right here is the gold miners, and they look pretty good too. I mean, that is a very bullish pattern, and what that tells me is that they're going to hold up really well here, and these are the companies that we're going to keep an eye on for you, but not right now. This is not yet the time. I've been sort of wrestling with that, but no, this is right here is platinum. Platinum looks bullish to me. That's another commodity. This one's palladium. Palladium looks, again, has been in a bullish pattern. That looks good. This is oil. Oil is possibly breaking up. Gasoline is breaking up in another chart I had. So, again, that's the inflation theme I've been talking about, that it's coming back. and a lot of these things are showing it. This is El Dorado. It's making a new high. This is another one of the miners that we just love. Even while gold's getting hammered, this thing's making new highs. So, these are the kind of ones that you keep an eye on. Now, where I'm a little puzzled today, and I brought my crystal ball for this reason. Was, the whole financial sector is just baffling me right now. We've talked about how crappy it looked. It looked really bad. So, I had to go to the crystal ball, had to ask Ace what his advice was. He had nothing to say at all. He's, he enjoyed his birthday too much. I think he had too much tequila. But in any event, he, the crystal ball, well, didn't tell me a whole hell of a lot, but it helped me draw better balls on my charts. So the bank index kind of broke up in a weird way that I sure as hell did not anticipate. And I don't know, I'm not going to say right now that this changes my worldview yet, but I am going to say that this certainly causes me to doubt what I was thinking before, and should cause you to doubt the same thing, is that this is not expected. This is not consistent with the views we express. So, it's possible it is, but it's possible it's not. So, we'll go to the individual ones. American Express, I don't know why this thing just like exploded like that. Looked crappy and all of a sudden it exploded. So, you have to wonder why. Here's Bank of America. Make Bank of America great again. Well, looks like the stock, broke up. Is it necessarily an uptrend right now in a bull market? No. It could be just one of those things that happens as a bull market exhausts itself. The crummy companies all of a sudden become bought because they're crummy. I don't know. Now we have Berkshire Hathaway. This is another one I've talked about. This one exploded too. I don't know what to say here. It hasn't made new all-time highs, but it certainly made new highs for the recent period. You've got to respect the market here, and this did not behave the way I expected for sure. So we rethink that. Citigroup did not do very well. At least Citigroup kind of behaved badly. So this one is still lagging the group. This one really didn't do too much. Goldman Sachs rallied, rallied all the way back to close to its highs. This one looked like it was breaking down. So, again, everything is telling us that, we need to sort of sit back and, evaluate where things are. JP Morgan, again, it looked like it had broken down. All of a sudden now it looks like it broke up. Why it would rally 12 points in one day is beyond me. But it did. The thing that the reason I still don't entirely throw the towel in on the thesis that the market has peaked is interest rates. Interest rates are so important. This is, by the way, Wells Fargo. This one also looks like, may have kind of, in a very meek way broken up. But the reason interest rates are so important is that as they go up, every financial asset's value goes down. Financial assets are worth, basically the sum of their cash flows over time. When you have higher interest rates, those cash flows are worth less in present dollars. So higher interest rates are great for people who save money, and they're terrible for people who own financial assets because they devalue those assets. At the very end of the day, interest rates are going up. I do believe that. I think that is still very strong, and that is going to be like an anchor on all other financial assets. So, I have a tendency here to look at this as, we had a little rally here, but let's let it play out before we make any decision on a couple of days that were really, fairly aberrational. Anyway, I hope you've liked us, that you like us, you subscribe. It's been great presenting for you and hearing from you and all the comments that we've been getting. This is the place for education, information without fabrication. Come to, this is called Hoot Loot. We love doing this. We love hearing from you, and some weird and interesting stuff going on in the market. We're going to talk more about it on the next weekend broadcast. Please like and subscribe, or at least subscribe and maybe kind of like us, or at least like us a lot. Anyway, we'll talk to you next time. This is Hoot Loot, Markonomics 101, over and out.